Ladies and gentlemen, good day. You are once more welcome to the Dicalo Consulting Learning Platform. Dicalo Consulting is an accounting and management consultancy firm. Given the advent of the COVID-19 situation, we're taking a move in order to assist owners of businesses, individuals, institutions, and other stakeholders. We are taking this opportunity to train them on how to be able to prepare their basic financial statements so that they will be able to know at the end of the day how their businesses are performing, since it's very expensive for them to hire permanent accountants. So in our first session here today, we'll be looking at accounting fundamentals and introduction to financial statements. Now, what are financial statements? Financial statements are the accounts which are being prepared and presented at the end of the accounting period to show how the company or how a business has performed during or over a given period of time. Now, in this session, we're going to look at the format of what we call the balance sheet. And like I explained, there are three different sets of financial statements which I'm going to train or teach us here to understand how to prepare and present them from inception right up to the end of the session. So initially, there are three main types of financial statements. We have the income statement, which shows the performance of a company over a period of time. We have the statement of financial position, or the balance sheet, which shows the position of a company at a given point in time. And then we have what we call the statement of cash flow, which shows the movement of cash in an organization over a given period of time. And these cash flows are classified into three major categories. We have operating activities, investing activities, and financing activities. At the moment, we're going to focus more on preparing and presenting the balance sheet, or what we call the statement of financial position, in accordance with international accounting standards. We're going to look at how to prepare and present a simple balance sheet. Now, like I've explained, these are our three main financial statements. I've explained about the balance sheet. You can see that our balance sheet has three main components: the assets, liabilities, as well as the equity section of the balance sheet. Now, at the level of assets, they are shared into two. We have the current assets, and then we have what we call the non-current assets. Assets in general are described as those resources which a company is controlling as a result of past events and from which the company is expected to generate future economic benefits. Example of assets, we have land and buildings, motor cars, machineries, uh, etc., inventory, and other things. Now, liabilities are the present obligations of a company as a result of a past event and from which the company is expected to pay or settle in the future. Liabilities equal will be grouped into current and non-current liabilities. Example, we have what? Accruals, payables, short-term loan or long-term loan or things like that, accrued expenses. And then we have equity. Equity is that special part of the balance sheet which simply shows the amount which has been contributed or who has been invested in the business by the owners of the business, and any other components like share premium, revaluation reserve, share premium, etc. So, like I've said, our session now is going to focus only at the level of the balance sheet. Now you see that here at the level of balance sheet, we can either prepare our balance sheet in two different formats, either in the horizontal format or in the vertical format. At the level of the horizontal format, you simply show your assets on your left hand and your liabilities on the right hand. Now they are going to be grouped into current and non-current liabilities. At the end of the day, the total of your assets should be equivalent to the total of your liabilities and equity in order to respect what we call the accounting equation. Now we have what we call a very important principle that we follow in accounting, which we call the double entry accounting principle. We're going to organize a different session for this one. The double entry accounting principle is simply a special accounting principle, which means that every transaction which occurs in accounting gives rise to a dual effect, which we're going to continue, which means that every transaction which occurs in accounting give rise to a dual effect. One of the entries will be debited and the other entry will be credited. In our subsequent session, we're going to be presenting. The double entry accounting principle is simply a special accounting principle, which means that